as you can see from understanding the risks in the digital era, a very important subject, and which I think even the digital era and the customer expectations and elements of this was also referred to by the IRD chairman as well. If I can begin from there, if you could perhaps share your thoughts about first some of the points that you found about his speech when he mentioned. In particular, if you could look in terms of, he mentioned about the rural connect, talking in the local language or whatever. We have some sense in terms of your understanding of what you've done. If you can elaborate a bit on what your reading was.
Thank you. So I did, first of all, I'm a bit under the weather, so please excuse my tone.
But still I think it's good at least you are able to, we'll keep it in staccato style so that, you don't have much pressure, but
thank you.
Very nice of you to still take time and talk to us.
Thank you. So I actually was very energized by the address of the chairman this morning. I wrote down actually a few things. Anytime, anywhere service is something that we must do. Digital first journeys. Customer centricity, going to the local language as you mentioned. And 3 is deeper penetration.
Yes.
So now, in our company, we're on this journey already. So for example, in our health insurance, we have a product called Aapke Liye. In fact, the video that was playing right before, it even talked about that. This is exactly in that direction that in each state we have a separate product tailored to that state, in the local language. We saw that this was a need actually last year. So we developed that product and we launched it this year. The feedback has actually been quite positive. So the comments from the chairman actually are quite aligned with what we as a company are already trying to do. The second point that was mentioned, very interesting point that was mentioned, is that we need to go deeper. And this is also something that we at Bajaj General saw the need of as well, because when we saw the vision of insurance for all, we saw that we need to get better, we need to expand our reach. So we created, in fact, a dedicated vertical called the geography vertical. And the whole aim of the geography vertical is to go as deep as they can inside the country. And so far, the pickup rate is actually quite promising. As a company that prides itself on being a very high solvent company, we have to, of course, do this in a managed way such that the capital needed to create that distribution force is done in a slow manner so that we continue to be one of the high solvency companies for the long run. Because as the chairman said as well, we need to think about it in a very long-term vision. So we at Bajaj General want to be here for the next 100 years, and our aim is to continue in this sustained manner.
So these measures would be scalable also, you think, and modular, which you can replicate in other geographies.
Absolutely.
Now there's this point actually when we were talking to some of the people during the break. When we talk of risks in a digital era, if we take a finite time space, say over the last 5 years or so, in your view, how do you find the definition change? I mean, what say 5 years ago used to be the points that would bother you or anyone trying to devise a policy compared to now? How has that changed?
So our behaviors have changed. We have to just acknowledge this, right? 5 years ago, even 10 years ago, digital risk, cyber risk were not, I would say, at the tail end of the top 10 risk for any insurance company around the world, not only just in India. That has dramatically changed. Now, through this transition, we have to start thinking about it like how we did when we first started to deal with Nat Cat risk. When if you recall, many years ago, when people were not really talking about predictive modeling for Nat Cat risk, we are on that initial journey in the digital era currently. What we have as an industry is a very, very powerful tool that has come recently, which is this quantum computing. You know, what we need to do as an industry is, you know, harness that quantum computing to create predictive models so that the journey to get to the maturity as we are on a NatCat basis is much faster.
So this, we've often heard this, and as journalists, you know, any sector that we talk to, any senior leader we speak to, this element comes in of leveraging analytics and AI. So, in terms of quantifying risks, how have you been able to crack this problem, and what do you see as the elements occupying the mind space in the year or so?
So you have to look at it from two different perspectives. One is from the retail perspective, and one is from the commercial perspective. From the commercial perspective, I would say that the quantum computing, the predictive modeling, has already helped us to identify large events. You know, I think it was spoken on the stage earlier today about what happened with Tata Group, for example, right? So we have enough, I would say, initial data points to extrapolate that using artificial intelligence to create predictive modeling. So that is already in place. The problem really as an industry we have is on retail.
Is that?
On retail digital risk. This is really where I would say we need to start thinking, putting a lot of effort behind, because we need to start driving this conversation. The thing with retail risk is that we need to start thinking about our digital footprints from a retail perspective, such as you and me. How does your digital footprint look like? What are your exposures? We're not thinking in that direction currently. We do everything on our phone. We do everything online. But are we taking the same measures during this journey as we did for physical health? So if you look at physical health, we do a lot of things to maintain our physical health. I'm unwell right now, unfortunately, but you know, historically, I wake up in the morning, I exercise, I make sure I eat well, I make sure I see a doctor, I make sure I go to do a blood test once a year, all of these things. For our digital well-being and the digital risk that is associated with retail, we don't do that much. And first of all, do we have the tools to do it? That is yet to be determined. But we need to start laying the initial, you know, this rhythm of how we do it for our physical health. We need to start doing that for our digital health.
Okay, interesting actually. The other thing, in fact, was touched upon, and I think I see that as a link node across various sessions. It's about this, I mean, we have of course seen this in the news as well, this climate change, the issues around disruptions. We've had floods, landslides, unseasonal rains, urban areas also flooded, not just about what we've seen in Mumbai or Delhi or whatever. So how do you foresee pricing and maybe capital, planning for capital in this? How do you look at it as?
So you've touched actually a very important point on capital planning, capital management. As I mentioned earlier, we are a company we're interested to be around for the next 100 years. So for us, capital planning and capital management is fundamental to our day-to-day business. We, excuse me, the tools that we have on our hands as an industry, not just at Bajaj General, are way more advanced than we had it even when I first entered the insurance field 15 years ago. So quantifying the risk you're taking on is something that is, I would say, much more advanced than it was 10 years ago. Is it where we would like it to be, to have that exact accuracy? Not yet. We're working in that direction. But the tools are there for quantifying the impact. The next thing is to incorporate those tools in the underwriting framework and to constantly stress test your balance sheet on scenarios that have happened in the past. Yeah? And also now what we have, which is something that we didn't have before, is to create new scenarios, right? These are AI generated scenarios. I mean, one has to, of course, check are they really that much in the tail, these scenarios that one needs to not worry about. But what we do as a company is that we constantly quantify our risk using the models that are there, and then stress test our balance sheet to ensure that we're not taking too much, more than we can handle.
So how much of a challenge would that be? I mean, in terms of just operationalizing it?
Well, the thing is that it won't be that much of a challenge if you have, prudent underwriting standards, and you effectively deploy the reinsurance capacity that is available in the market. If you ask me, the reinsurance capacity, if my colleagues from the reinsurance companies are here, they would tell you that, there's ample capacity in place. If for the right price you can find the right cover. The question is, how effectively does one use it to ensure that you can keep the sustainability of your balance sheet and your capital planning for the long run?
Since you mentioned about balance sheet, as a CFO, you're more of a money in the organization, as it were. So how do you therefore balance this, the financial discipline, quarterly financial discipline, along with long-term investment in data and all of that? It must be how does the money in the organization do that?
So, as you correctly said, it's a tough task. But my shareholders and my boss made a conscious decision that I would also become the head of data analytics, so that all the investments that I need to do on the data analytics side are done in a conscious manner, because I'm also responsible for the balance sheets. So, I have purview of both. Now, do you tell me that can I compromise one for the other? No, but I have to do it in a sustained manner. So, for example, there was a discussion earlier about KYC coming in, right? Such a powerful tool. It is the blurriness of the customer has completely changed. As a general insurer, we are a high-frequency business, right? In this high-frequency business, when you have more clarity on the customer, and going back to what the chairman said about being, tailored pricing, the more clarity you have on the customer, the more tailored pricing you can make. So the investments we make in data and our models and our pricing models are only going to lead to a better P&L on a quarterly basis. So those long-term investments we keep seeing the harvesting of it every quarter.
That's interesting, actually. So, given your health in mind currently, where I'm kind of feeling bad that I'm kind of stretching you to say a bit more on this, but I think a big round of applause for at least, that his ability to, despite ill health, he's been actually putting all this together. So, thanks so much. I think we'll leave it at this.
Thank you.